A little bit. A little bit. We're treating this.
All right, let's get going. We'll let them come as they come. It is wow. The month is almost gone as usual. Time flies. We're already 1 month into Jan or to 2026, boys, and it is quite a year. But stocks don't seem to be carrying at all, huh? We're just up and to the right. Let's start with you, Bob. It's I haven't talked to you, I don't think, yet this year. It's been some interesting developments in the energy market. What's going on?
Yeah, so actually, energy is up year to date, one of the better performing sectors, but that's because people are celebrating oil sticking around $60 a barrel here. Which, I was reading something over the weekend that over the last 25 years, oil's averaged around $63 a barrel. So we're right close to the 25-year average on oil, but we haven't seen the volatility of late that we've seen historically in oil. So it seems to be holding somewhat steady here. On the natural gas front, yes, we've had some extreme weather. There's power outages, there's cold weather. This whole storm has hit much of the US, and that's driven the near term spot price for natural gas up above $6 this morning. But what I'd point out is the market, with regard to the stocks, it seems to be looking through that. And if you look then at beyond the front month, which is February, March is back down to 370. We're back down to 350 to 360 coming into the summer month. So the point is, the market is sort of looking through this near term disruption with the weather into more normalized prices as we get past this and move toward the spring. As a result, the more natural gas levered names are sort of holding steady here. They had their move up. They're off their highs for the year as the market's looking through this weather and looking toward going to the spring here. So I'm not really doing anything on the gas levered names today. As I mentioned last week, I did write some out of the money covered calls on Expand and EQT, looking out to March and April, just managing risk, taking a little premium off the table, just given that I didn't think that they'd run hugely between now and the spring shoulder period for natural gas. As far as oil here, again, it's headline driven. There's a lot of crosswinds here, a lot of production shut in Texas and Oklahoma and North Dakota because of the weather. On the other hand, there's not as much gasoline demand because people aren't out driving on the roads. So, it's sort of a one six and one, half a dozen to the other. But the other thing that's holding up oil prices, obviously, is these tensions with Iran and with Trump moving the USS Abraham over into the Middle East and Iran sort of saber rattling and seeing how that all plays out. And so again, oil stuff because it continues to be driven by the latest headline and what's going on with, GDP around the world, what's going on with geopolitical tension, what's going on with the weather. Our view is still that it sticks right here around $60 a barrel. We still like the oil names, although I'm not buying or selling anything right here. We're hitting an earnings season here in 2 weeks, so we've got a lot of news coming up, which we'll circle back on that later on what we think here on some of the specific names. The only name I'm continuing to add to here, one of your favorite names, Ben, and we've talked about this before, is on the service side, Schlumberger, which I initiated a position in a couple of weeks ago. As I said, it's been over 3 or 4 years since I've owned an oil service name, but just given how things are developing in Venezuela and around the globe, and they beat estimates last week, so they had a good quarter. The growth is going to come not from the U.S. They expect things down to be down maybe 5% in the U.S., but the growth to come from international. And again, Venezuela could be big for them when that opens back up. So right now, as far as any activity, the only thing I'm doing is looking on a dip or pullback to continue to add to my position in Schlumberger, and also looking at Baker Hughes. Started small position there, but got a long ways to go to build a full position in Baker
Yeah, I
Hughes.
love.
So on the field service side, those are the two names. I've initiated positions, and we'll look to continue to build here on any pullbacks.
Yeah, I love the Schlumberger. That's one of my biggest positions, and it's like
Yeah.
ridiculous because, like you, I haven't owned an oil. Now they did have a nice run from 21 into 22, and I thought to buy it in 2020, and I didn't. I owned so much other E&P and oil, like it was. I didn't need to add to it, but yeah, I haven't owned a Schlumberger in quite some time, and like you said, they're world class at what they do, and the invasion thesis kind of or regime change thesis, we saw how it worked with Iraq. Iraq's at all-time high barrels now, 20 years later. And Schlumberger and Halliburton were big parts of building that infrastructure out. And again, it's a little bit cheap. It's not as cheap as it was when I got involved at 37, but it's still pretty cheap, and they're making cash. And it's not like you said the U.S. is really banging down the door these days either. One more thing, Bob, and then we'll go over to Kevin. Nat gas highest in quite some time, huh? That's
Yes.
it's interesting because I look at EQT and RRC and those, they're not really buying it, huh? Like they're just
Well,
saying, oh, okay, this is a
yeah,
once
they're
in a
looking.
blue moon wet storm or whatever.
Yeah, they're looking through that again. If you look at the futures contract, that $6 plus is in the February contract, but the next month, March, is 370. So it's this spike on this extreme weather, this extreme demand, the stress on the system, and that spot price with that demand just spiking here with this cold weather. But like you pointed out, EQT and Expand Energy are now looking through that and saying, okay, we sort of got a little bit of a bump on that, but it's going to settle back down once everybody recovers from this storm. And look, the storm's passed. It's cold. We're shoveling sidewalks, but the market's looking through it now.
All right, let's hop over to Kevin. Kevin, what you got for us today, buddy?
Want to update just some things I did literally, at the open today. Copper, bought it in July of last year, right around here, and talked about it on the show. So it was a surprise. But it's a double in 6 months, and that doesn't happen too often. And when it does, especially on this big gap up, huge volume, I sold half, and I'm raising some cash. I'm up 28% so far this year, and I am. But I understand. The pullbacks here can be vicious, and I don't want to tempt the stock market gods or the metals markets gods. And so I'm peeling some off as we go here, and I will do it imperfectly, and I probably won't pull off enough as we go up here. But more on that later. But that's just something that, and frankly, copper spot is still below the 610 recent high, and so when it takes that out, I'll be curious to see do the miners take another leg up, or frankly, do we not take out that high and we're just stuck here in the high five? So copper is clearly working, and but I'm not going to be an idiot. I'm going to be pulling some off as we go forward. In this case, double my money in less than a year, sell half. Did the same with platinum, PLTM, did the same with silver, SIL, and I will continue to do that. But so this is a win for our members, I hope, and more to come. More to come.
All right, good.
Hey, Bakes, let me ask you. I know I asked
Fire
you
away.
appreciate it. With all the metals you mentioned, gold was one that you didn't mention. I didn't know if they all sort of move parallel to silver and copper and platinum, or does gold separate itself from the other metals?
Well, gold led this, and silver and platinum caught up recently. Silver, platinum hit new all time highs before gold did, but gold is making up for it in spades. This is the ETF; it isn't the spot price, but gold spot is now 5,000 plus, and Rosie was on a podcast that I listened to yesterday, David Rosenberg, and he's talking 6,000. He makes a pretty plausible case. Ben's been a gold bull forever, and rightly so. I just and the silver miners, roughly 15% of their production is gold, so you participate. But I mean, central banks are buying gold; they're not buying silver, and they're not buying platinum. So there's other things going on. But I would not be a buyer of gold right now. If you have pullbacks, then I would be more interested. But let's face it, the commodities they run it. These are multi-year cycles, but they become parabolas. And where we are in the parabolas is what I'm going to be doing a lot of work on, and I might elicit some help. So
Yeah, I think that's right. I think it was 2022 fall when I first got back I mean, look, I've been a gold bull since 2003, but I did get out of all paper gold in 2011, And I didn't get back into paper gold or talking about gold to people or recommending it or anything until 22. And I think that's when it really changed. It was like the Europeans and the Americans, essentially stole like pirates, the Russians 325 billion treasury bills. And since then we've just seen gold have a constant bid. And the central banks are buying. I think that it's a thinner. I was trying to talk to someone today to understand the actual float on gold. I think that's a dynamic on all these things, is that the float just can't handle these kind of flows. So when you get actual flows coming in, especially junior uranium miners, which I know Kevin's going to talk about in a second, like,
Yeah.
these areas just were in a bear market for so long that just like a sliver of the Mag 7 going into them just causes these, price behavior of that we see, which, to use Kevin's word, it is a parabola. And parabolas are very difficult to deal with because, if you hold it and you can ride it, but it's a hard ride. It's a bit like a Bronco. You're going to get some big swings, and trying to decide where the top of the parabola is also a tough gig. So yeah, it's not, look, there's big money that, I mean, look, silver was $48 in Thanksgiving, and it's $110 this morning. That's an extreme move because remember, silver is a big market cap, right? So that's added $3 trillion of cap in, what is it, 2 months? Two and
Yeah.
change months, basically. That's extreme. Gold's up. I mean, it seems like gold was 4,000 in October. So gold, which is a $30 trillion asset, is added 25%, which is 7.5 trillion. So gold and silver, $10 trillion in a quarter. So that's big. That's a lot, And the other one's a little smaller, but yeah, it's a difficult thing, Kevin. To be like, hey, this can keep working, but when you're talking about what you're going to do, that you got a 20%, 15% drawdown can happen at any time also, right?
I was going to save this for the end, but especially with you on, I'll elicit this. What I'm trying to do using AI and other things is say, okay, what happened in 80, what happened in 11, and if the same thing happens here, where are the points to step off almost all the position? For example, I forgot where silver started, but it ended up at $50 in 1980, for example. So let's just say, for the sake of argument, it went from 10 to 50, and it was a five bagger. So if this is I'm just making this up. This is not what I am forecasting. But what I want to do is go say, this is what happened in the past, and yes, the parabolas are fun on the left side and they're god awful on the right side. And how do I exit the left side as gracefully as I can without getting clobbered on the right? And I'm trying to find historical analogs where I can say, and they're imperfect. Yeah, they're imperfect. But if for example, if silver was a five bagger in 1980 and I've got a four bagger, I'm probably going to be out of almost all my silver when that happens. And so we'll see. But if any charts you have, anything you see on Bloomberg, anything you see on X, fire it away to me. I'm going to be doing my own work and try to find a way to do this. I'm doing it in my sell half when it's up 100, and peel it back to 10 when it gets to 14. Like frankly, I'm doing with the rare earth metal, which we talked about with Nadine this past show. But I'm asking for help from anybody. If you see good work on how to navigate this using history, I'm all ears.
I think what I would add is that have a plan and stick to the plan. Like the idea that you're going to top tick something is crazy. The If you stick to a plan of, say, hey, like, just let's say for a thought experiment, we're like, okay, we think silver's going to 200. All right, we don't know exactly when silver's going to go to 200, but we think it's going to 200. And you're like, well, how much am I willing to risk in price pain, or price, like,
Yeah.
in just approach it like that. Like, hey, can this go back to 75? Most definitely. So are you willing to say, hey, I'll risk $35 today for the idea to make 90, almost 3 to 1. And that's a if I pitch you guys a 3 to 1 on the show, you're probably gonna be like, oh, that's pretty interesting. But then you look at the chart and you're like, well, the chart's you're gonna anchor to it and you're gonna be scared of it. And I'm not saying to do this, I'm just saying this from a theoretical standpoint of have a plan like Kevin does and just roll with it and don't think twice about, oh, I could have made more money, or I didn't make all the money. I think that's the
Yeah.
better way to approach it.
I will get, I want to lament every single sale I make, in everything, but certainly here with the metals, which have worked way better than I thought they would, sooner than I thought they would. But I'm curious to use your number 100. I mean 200. I want to be down to almost nothing when it's 150, 160, 170, something like
Okay.
that. And
Yeah.
and I always use forced displacement. So if I find something, especially if it looks like gold did back in 2022, which is one of the most beautiful cup and handles I've ever seen. You know, I would love to buy stuff coming out of that kind of a base rather than I don't buy parabolas. I bought the base. It spent all that time under 49 and change, and it's gone up a lot more than I thought it would.
Yeah, I think that that's in general a problem with that I've historically had as an investor trader, and the reason I still own the gold is because I can't hit a button to sell it. It sits in a secret place, and it's a physical bar. And
Yeah,
versus, it's easy to press the buttons, right? You're like, well, I've made enough
yeah,
money, and I think that it's a constant challenge when things work too fast. Like if you have something like Bob and I's favorite MLP ET. Well, I don't know if it's Bob's favorite. I don't want to put words in his mouth, but I know he likes it, like me. Um, steady, right? It was steady up into the right from $4 or $5 in 2020, whereas some of the more let's call them speculative E&Ps went up really fast and then they dirt napped, right? And so it just kind of has to go down to you have to ask yourself what kind of trader are you? What kind of investor are you? Because when it works really fast, the natural thing you want to do is sell, right? So if you were long silver and went 48 to 75 from from Thanksgiving till mid-December, that's a
109,
huge
109 this
move.
morning.
Well, no, I know that, but I'm just saying,
Oh,
like, that's 2 months. But I'm just saying, in 3 weeks, you got to move. I mean, silver sat on its ass at $10 forever, right?
yeah.
So when you're like, oh, I just made 30 points in 3 weeks. No one's ever going to sit here and say, or blame you for taking it off the table. But having said that, like you just said, it's 109. Well, you just missed off in another 5 weeks. Another 30 points, actually more than 30 points,
Hmm.
right? Like a little bit over 30 points. So there's no right answer. I just think that you just have to know who you are and have a plan and stick to it, because if you go by the whims of your pants, you're going to get jacked around, or you're going to sell too early, or whatever. I just think that it really comes down to you emotionally controlling yourself, essentially.
Yeah.
Yeah, and I agree with that. But again, anytime you see anything, here's a historical chart. Here are the Fibonacci levels. I'm looking for all that, and if anybody has anything else, I'm going to bring it all together and at least be. I'm curious at a minimum. I would like to talk about URNJ, the junior uranium miners, if that's we got time.
Go ahead.
Okay. Um, and this is interesting because this is acting way better. When did I buy this damn thing? All right, this is July of last year. I'm going to go to the daily for now. So yes, this looks extended, but it didn't look extended here. Okay, I forgot my mouse. I'm an idiot. But so there's uranium really starting to pick up. Frankly, the miners picked up before the spot did. Well, now spot's picking up. Here's the new high on 2x normal volume yesterday. Oh, I can't work this. Sorry. Um, the but my case with uranium has been, and I've been talking about this for 5 years. Fukushima happened now 15 years ago, and we've worked off all of the anti-nuclear rhetoric. And I know that in America it's NIMBY, and we're not going to start anything, and we're not going to greenfield anything. But China and India alone are enough for the uranium story. And I think everything that can possibly be reopened here in America will eventually be reopened, and the demand for uranium is going to be monstrous. I don't have the uranium spot price here, but uranium just took out 88, 84 was a big level, 92 is the next one, and 106 is the level after that. And when you do that, then you start tackling, the 2008-9, sorry, the recent level high of the all time high of 135 or so. But I mean, this is the monthly, and I mean that's a bull chart. Yes, it is a parabola in the making, perhaps, but we've gone from a low of 18 during COVID for spot uranium. Here we are at 88. And I don't think there's any reason why we don't hit 130 plus. And it's the same thing with silver. If you take out an all-time high and nobody has a loss, then you have all kinds of squeezes going on, and uranium goes much, much higher. I'm up 42% so far, but I own this, and I'm holding this, and it's acting frankly better than the broader uranium ETFs that own the utilities, the Constellation Energies and the Octas and what have you. So, but I'm a bull on uranium. I've been saying this for a while, but this is we have not had the silver like breakout in uranium yet, and I want members ready for it, because I think this is going to be, grab your popcorn. This is going to be a lot of fun.
Sounds good. Congratulations on that. It's been a good trade
Thanks.
so far.
Thanks.
Yeah, wild times. Commodity bulls are crazy. We just got to get Bob his final leg of the commodity bull, the oil, to participate. Nat gas is up there now. Even it's only one commodity left. Although, what's interesting. Speaking of parabolas, we've seen egg prices. Everyone was talking about that a year ago, and that's down 80%. And then cocoa, which I don't know if you guys remember the fall of 24. Everybody just couldn't stop talking about cocoa, and that's down quite a bit as well. So, these things, umber in 2020, 2021. So these things have a way of parabolating and then going the other side. So, don't think of this as like the next NVIDIA or something necessarily. It's going to overshoot to the upside, then it will smash down, and then it'll kind of find some area it wants to be at. But definitely popular now. Congratulations, Kevin. You've been all over it. So
thank you, my friend. Thank you.
As I'm late here in Dubai, and I'm going to call it because I'm under the weather.
Great to see you. Thanks a lot.
All right.
All right,
Thanks,
guys.
Ben.
Well, thank you for joining us. I'm Benjamin Brides, Bob Morris, Kevin Bakes Baker. This is Wall Street Beats, January 26th. We will see you tomorrow.
Thank you, folks. Thank you, Jen.
All right, guys. See you later. Bye.
Thanks.
Bye now.